All right, so I just wanted to get up here for a little bit just to basically go over, you know, just a couple moves I seen on US30. I'm gonna go ahead and pull that up. And basically, I'm not gonna be up here long, like I said. Just for US30, it's clearly been on the uptrend, right? And I just want to show you all like a move that I had caught earlier in the week. So this was based off the 4-hour time frame that I had seen. So just starting off, just for those that are new to like time frame correlation and everything, we clearly seen that we've been on the uptrend clearly since like 2010, right? We've been on a straight uptrend. Minor retraces that you'll see that'll impact lower time frames, but overall higher time frame momentum, we've always been bullish until we got into this realm of consolidation right here. And based on the area of consolidation is where I began to break down, just what I was saying on the weekly and daily time frame. Still clearly bullish. As you can see, my purple candles mean bullish, yellow candles mean bearish. So just on this daily time frame, I was analyzing, and I had seen, back in April that the market had made this higher low point right here. Clearly, we was on the downtrend up in this area, but once we made this first higher low point right here that broke this lower high point on a lower time frame, such as maybe like the 4-hour time frame, it gave us that retest. And from that retest, we've been clear bullish ever since. I seen make, like I said, make the higher low point right here. Came in this consolidation area, but still maintained a higher low point based off of this A to point A to point B up here. Doing the highest point A, point B. Came back, still double tap 38.2%, which gave you like, kind of like a triple bottom, double bottom if you want to count this higher low point right here. But all of this was basically just a tested point. Okay. And as you can see on our weekly time frame, hit our negative 27 and negative 61.8. So that's just a way to show you all that also you can use fibs on any time frame as well. Okay, to get larger projections for moves and then be able to take advantage of them on the lower time frames. So what I did was this week, I seen that the market had made some support, and that support is made by multiple candlesticks. It is a bearish candle followed by a bullish candle. And that gave me tested candles right here. But then when the market came back to retest this area, because of this wick that I seen right here, I knew that area would be super exhausted, right? Went down to my 4-hour time frame just to zoom into this area. As you can see, I put these little squiggly lines as just basically my support as holding up price, right? And that's just something I do just for, my psyche. But I seen that this was the area that was not being broken at all, right? And then I also had a counter trend line to see when that momentum was going to shift on the higher time frames. So I had this was what I was talking about on the higher time frame, such as like that double bottom pattern that we seen right here. We had that long wick that was made on that on that daily time frame. As you can see on this 4-hour time frame, it's just a bearish variation pattern. You had that 1, 2, 3, 4, 5, and this bullish candle engulfed all of these candles pretty much. So that gave us our support, from back here, and it just retested, broke that lower high point, gave us a high point, compared to this move. But we understand that we're still in the overall bearish momentum area. This right here is still considered sell zone. And this over here would be considered more of a buy zone. Okay. So yeah, but I understood that on my higher time frames, this is the area of exhaustion that I have been looking at. So I seen that the market came in, this would have been perfect entry, getting in somewhere in this support zone right here. But I low key wanted to wait until it broke out of my sell zone, just because this is US30. This is, high volatile moving pair. And, I understand what my reward could be if I'm patient and I choose quality over quantity and I wait for, certain confirmations. So I had my bullish engulfing. I had my support made over here. I had a double bottom pattern that happened, 1, 2, like that. So even if I go on the line chart, as you can see, it held up right here and didn't want to pass in below this 2500 zone, right? Going back to the candlesticks, it broke out into my buy zone, made a high point that was just a previous high point. So it tested this point right here, and then it came back and made this higher low point. Now, this is where I chose to take advantage of this market at, because I could then predict and be more probable about the move and about the buy that I was looking for. And the reason that is because, like I said, it broke from out of my sell zone into my buy zone, which gave me a higher time frame momentum shift. So that's a confirmation. I've already made two low points. One which was a higher low, one which was a retest of a previous low point. So this would be considered somewhat of 100% retrace, right? Based on our Fibonacci level. Seeing that this area was broke right here. And this is how we begin to dissect, certain moves and things like that. So we had that happen. And then once it broke out, I waited for that high point. I waited for another higher low point. Now this right here could have been somewhat of like a fake out if you were trying to get in based off of this support. But to me, I just felt like, I wanted to see the area at least try to come back to this zone, right? Or this zone right here. And the reason that was because when it broke out, it first made support right along this line. And I have this line here because it's been tested in the previous, through previous data. So it came back and it began to exhaust here once it broke out. I didn't take the first move that I seen. I kind of waited for it to make a true high point, which was right here around this area. And then it came down to make a true low point, which if I put my fibs on from point A to point B, it came and tapped my 61.8% on my Fibonacci level. And to me, that just means that I'm looking for a moderate pushback to the upside to my negative 27%. And as you can see, once it gave me like a steeper retrace that also lined up with confluence from this previous support, I was able to dig deeper into the data. And that's where I seen that the market was respecting this area multiple times, and it gave me this bullish engulf in this 1, 2, 3 variation right here. Basically gave me my newfound support, and I was just waiting for momentum to come in at that point. And once I seen that the market closed above this candle right here with this candle, and then I seen that the market had came back, retested again, and then gave me more bullish momentum, I was clear ready for it to go to my negative 27%. So I took the move up. I took this move up right here, and I ended up closing out in this area just because, like I said, this is a high volatile pair, and I didn't want to see it retrace more than 38.2%, right? So even just on here, I could see that the market, was somewhere in that 23.6. But what the market likes to do, and what I was taught in the 5-day course with Q, is the fact that sometimes the market will come up and hit previous resistance, right, that we've seen over here. So I was already watching this area, and because I already had a resistance line up here. But I knew that the market sometimes will make a 23.6, and then it'll come, make its high point, and then come back to make it's 38.2 in a sense where that 23.6 was, because you realize as you get more knowledgeable on the charts that the market do this on a lot of pairs such as GJ, UJ, high volatile pairs. It'll come and make a resistance point, give you that 23.6, and then continue up because there's not enough sellers to make that true lower high point. So it'll come up and make a high point and then come back to give you that real retracement that'll usually stop around that negative 38.2, sometimes 50 to 61.8%, but mainly give you that main lower high point that you're looking for. And so with me, I had a lot of confluence up in this area, so I ended up closing out in this area when it started pulling back some. Once I seen it made that engulf and then it pulled back some. I ended up getting out, but I was comfortable with my profits. I was comfortable with the move that I took, and then I didn't get in again. I'm not even gonna lie to y'all. I didn't get in again once it made this support right here. I was satisfied with the profits that I made off of this move. So that was just like a simple back test. That I wanted to show you all of a move that I had caught off of US30. And as you can see, like the thing that you want to do is make sure that you stay up to date with current price. Now, meaning like you don't have to be slaving over the charts and being on the charts, over and over and over again. But you do want to make sure that you're checking the charts if you're depending on the type of trader that you are or that you see yourself as being, swing, intraday, scalp. You want to make sure that you have time slots to where like you're checking your charts because there's new data. All right, so you want to make sure that you're updating your charts so that way it stays current and up to date with the new data, right? So as you can see, I have trend lines that's helping me gauge the momentum of price. I have counter trend lines where I know what time frame these trend lines were drawn on, and I understand what type of momentum is being shifted. And that's what gives me my edge in the market is that I use my counter trend lines. I use my Fibonacci's on higher and lower time frames sometimes, depending on when it's needed. But I'm more structure based than anything. And as you can see, where the market is at right now, US30 is testing a point of resistance. If I zoom out to the daily time frame, we had previous resistance that was being tested up here. Also came and rejected this area every time it's been up here. So those are things that you want to keep in mind when you're trading these high volatile pairs and actually being patient and letting the data show you, when to enter and when to take advantage of this market. So right now, what I see is we're still a little bit on an uptrend. As you can see, we're still, steep trend line, pretty steep. But at the same time, like I said, it's just used for me to track the momentum of when the sellers are going to come into that market because that's what I'm expecting right now. And the reason I'm expecting that, even though we're on an uptrend, is because of the fact that, it's been a struggle for the buyers to break past this point. So I've been just watching this area and wanting to see how price either respects this area or rejects this area and be ready to make a move based off of how price acts towards this area. Okay, so this was just just something that I do, and if it's anything that you all like that I use in here or want me to go over more, just be sure to let me know. And add to your game, and make sure that, especially with level 2, that you're sticking to your trading plan and being disciplined, being patient, and not chasing the market. Use your proper risk based on whichever account that you have. Make sure that you're using multiple time frame correlation, and just make sure that you're gauging that momentum of price and making sure that your technicals are aligned and only trying to take advantage of the market when you have certain confirmations and certain confluence, But that move that I caught, yeah, it took me a while to set it up, or for me to catch the type of move that I wanted. Because like I said, I'm pretty sure people caught the move down actually at support and things like that. But at that time, like I said, I was still in my sell zone. So I was being disciplined within my trading plan, not taking buys at the floor, but wait until I got a little bit more confluence, a little bit more and having that confluence, it gives me it makes me a more probable trader, right? Because you got to remember that this game is all about probability. Even though I took the setup in my buy zone based off of my technicals and based off the candlestick patterns that I know and I recognize, trading is always subjective, and it's bilateral. So that means that you can win or win or lose, no matter if your technicals were aligned or not. So the thing is, you want to be a more probable trader and then just manage your risk, right? So that's what I try to do. And now that I'm getting more seasoned within my trading journey, I definitely want to pick more quality over quantity because nobody wants to lose. You know what I'm saying? Nobody wants to lose money in this game. Nobody wants to, it's a part of the game, yeah, but nobody wants to actively lose money. So I'm not going to be chasing, trying to catch a move every day. I'm going to let the market breathe. I'm going to let the market do what it do. And I'm going to try to capitalize off the market where, I feel like I'm most probable. Okay. So, this was just, like I said, like a short webinar, especially for my level twos, because, I just want to see where you all are, as far as, your trading journeys and, what pairs you're looking at and, just how you're going about your workflow as well. So, I just want to make sure that I put some content out there for you all so that way, we can stay active in this thing. So any questions, anything, just feel free to hit me up in the chat or, DM me in the chat or anything like that.